I'm gonna show you the three things that affects your credit the most. If you look here at this report here, you got your hard inquiries, you got your total accounts, your credit age. This really don't matter. What the banks look at, the first thing they look at is this derogatory marks. And if you don't have no marks right here, that means you done paid everything on time. You don't have no bankruptcies or judgments against you. They're gonna jump to this payment history. And as you can see, this is 96%, which is not that bad, and maybe missed one or two payments. So they really want this number to be lower, because if you miss payments, you're going to pay a late payment fee. So if this is 0, they want this number here to be a little lower, and they'll give you a loan because they know you're going to be late. So they're going to get that $25, $35 late fee. And the most important impact on your credit is this number right here. If you got any credit cards, and if you up to your maximum limit, if this is 80, 90%, they know you almost at your limits now. So more than likely, they're not going to give you a loan. But say, for instance, if this number is below 20%, that means you're not using your credits. So they're going to try to give you more to get you to use it. So your biggest impact on your credit score is this number right here. So if you can keep it under 20%, you're doing good. As you can see, this one is under 50%. Well, it's at 51%. That's saying if they got $10,000 worth of credit, they only using 5,000. So if this video helped, subscribe to my channel. Also, make sure you keep this number, this percentage lower.